2024. I'll start by introducing members before you. The table is the chairperson of the Monetary Policy Committee and Deputy Governor, Mr. Michael Atingi Ego.
Thank you, Kenneth.
On his immediate left is the member of the Monetary Policy Committee and Executive Director Research, Dr. Adam Mugume. On the right of the chairperson is Mr. Kalyango David, Executive Director Supervision and member of the Monetary Policy Committee. And next to him is Mr. Robert Mbabazize, Director Financial Stability. My name is Kenneth Egesa. I'm the Director Communications and Public Relations. We will have the reading of the statement, after which we'll take questions from members of the press in the room and also those online and any members of the public that may have questions submitted online. After that, we will have a translation of the monetary policy statement in Luganda. So without further ado, I invite the chairperson of the Monetary Policy Committee and Deputy Governor of Bank of Uganda, Mr. Michael Atingi Ego, to read the statement.
Thank you, Kenneth, and a very good welcome to our viewers and listeners to the reading of the Monetary Policy Statement for the month of August 2024. On 7th August 2024, the Bank of Uganda Monetary Policy Committee, MPC, reduced the central bank rate, CBR, by 25 basis points to 10%. In the 12th month to July 2024, domestic inflation continued to moderate, with annual headline and core inflation averaging 3.2% and 3% respectively, below the medium-term policy target of 5%. This is due to the fading impacts of global shocks like the war in Ukraine and COVID-19, the tightening of monetary policy early this year, and the exchange rate that has stabilized with a bias towards appreciation since March 2024. The relative stability of the shilling against the US dollar has benefited from the recent CBR increases and inflows from coffee exports owing to the favorable international coffee prices. Nonetheless, both annual headline and core inflation edged up slightly to 4% from 3.9% and 3.8% in June 2024, respectively. The increase in inflation was largely due to the increases in passenger transport, accommodation, recreation, sports, and culture services inflation. The increase in the services inflation was 6.5% in July from 6.1% in June 2024. Looking forward, the Bank of Uganda expects inflation to be below the 5% target in financial year 2024/25, broadly reflecting stable demand conditions, lower imported inflation, and exchange rate stability. The inflation projection has been revised slightly downwards relative to June 2024 forecast round, largely due to a lesser depreciated shilling exchange rate. However, we expect inflation to continue rising moderately in the next 4 months due to seasonal factors, but stabilize around the target of 5% by the first quarter of 2025. There are, however, persistent uncertainties around the inflation projection, including the effects of a possible escalation of the ongoing geopolitical tensions in the Middle East, potential energy price hikes, unfavorable weather patterns affecting food crop production, and a stronger than expected path for domestic demand. In addition, the signs of lingering inflation in other parts of the world and heightened volatility in both capital flows and the exchange rate could result in the stronger depreciation of the shilling exchange rate and therefore higher inflation than currently assumed. Conversely, the continued unwinding of the past shocks to energy and other imported goods prices may moderate inflation. The risks around the projection for inflation are judged to be balanced by several external shocks. GDP growth picked up in the last 2 quarters of financial year 2023/24, with an average growth of 6.7% year on year, compared to a growth of 5.3% in the first 2 quarters of the financial year. The pickup in growth was broad-based across all sectors. There are signs that the continued recovery in real incomes and rising confidence are beginning to pass through to stronger consumption despite the tight monetary policy. Indeed, the high-frequency indicators of economic activity indicate improvement in business conditions, as shown by the sustained expansion in output and new orders. Economic growth for the financial year 2024/25 is projected at between 6% and 6.5%. Over the medium term, economic growth is projected to be above 7%, supported by stronger private sector investments and government interventions, especially in agriculture and the global economic growth recovery. However, there are vulnerabilities to the growth outlook. Internationally, there remains a continued risk of higher commodity prices and a disruption to trade flows associated with developments in the Middle East and other significant geopolitical uncertainties, which could lead to weaker global economic activity and stronger inflationary pressures. In addition, the re-emergence of protectionist policies could add pressure on the international trading system and weigh on domestic growth through lower exports of goods and services. Economic growth could also be lower if the growth in private sector credits slows further due to higher costs of borrowing and higher domestic borrowing by the government. Additionally, a stronger shilling depreciation could weigh down on on domestic demand, since capital and other intermediate goods account for 75% of imports. On a positive note, more favorable weather conditions leading to good food crop harvests, higher government and private sector investment in the extractive industry, and effective government intervention programs could boost economic activity. Furthermore, if the world economy grows more strongly than currently projected, rising net exports would boost domestic growth than currently expected. The risks to this forecast are assessed to be broadly balanced. The MPC noted that although risks of higher inflation remain, the adverse impact from the past external shocks has abated, and there has been some progress in moderating risks of inflation persistence. Therefore, it was appropriate to reduce slightly the degree of monetary policy restrictiveness. As a result, the MPC reduced the CBR by 25 basis points to 10%. The band on the CBR remains at +/- 2 percentage points, and the margins on the CBR for the rediscount and the bank rates at 3 and 4 percentage points respectively. As a result, the rediscount and the bank rate will reduce to 13% and 14% respectively. Given the balance of risks, the MPC noted that a cautious easing of monetary policy is warranted in support of the objectives of containing inflation around 5% policy target and economic growth to levels consistent with socio-economic transformation. Going forward, Bank of Uganda will adjust its policy stance informed by incoming economic data with a view to maintaining a low and stable inflation environment which is necessary for sustainable economic growth. That marks the end of the reading of the Monetary Policy Statement for August 2024. Thank you for your very kind attention.
Thank you very much, Mr. Michael Atingi Ego. We will now open, we'll now give you an opportunity to raise questions for response. Please mention your name and the media house you're representing before you provide your question.
Yes, good afternoon. My name is Ali Twaha and I work with New Vision. Looking at the numbers on core inflation, I was looking at the numbers earlier. From around Feb, there's been more of a growth, not declining, in core inflation since Feb to date. But I was actually caught off guard when the deputy governor said they had lowered the central bank rate. But basically, I wanted to get more of the reasons, despite we see inflation edging slightly higher, but you're reducing on the CBR. The other is when I look at the liquidity conditions that were in the market, and we've seen many, especially the small banks, running for the standing lending, that facility. I hope you get it. We've seen an uptake, an increase in uptake from especially the smaller banks. One would wonder what the state of the banking sector is, especially for the smaller, the bottom, those at the bottom really. I would want to get an update on that, but also regarding the June 30th deadline on minimum capital, is all conditions. Did most of them meet these conditions, to operate? Because we've seen the closures, there's some sort of public, anxiety around some of those issues. The other is on the State of Economy report, where you said you would be, purchasing gold from the local artisans, and I thought I was thinking of the plan that you might have in mind, because most of the local artisans here tend to use illegal means to mine this gold. So I just wanted to pick your mind on the strategy you have, to support these artisans going forward. The other is on I guess that's it. On gold, do we have any gold reserves as of to date? Because our neighboring countries, some of them have, I think Kenya has a bit of gold reserves, not the dollar kind. We have a similar arrangement. Thank you.
Okay, Ali, thank you for the questions. They're quite a mouthful, but I will distribute them. I will answer some on the economic and financial front, as said by Adam. Then I will leave the question on the capitalization to the Supervision Directorate. I have here Mr. Kalyango and Robert to address that. So you asked a question that you are seeing an uptick in inflation, but we are going ahead to lower the CBR. Again, like we have said in the past, the monetary policy stance is forward-looking. if you anticipate that, or if you project that inflation is going to be lower than you had projected in the next 12 to 18 months, you take a policy action on that. If you also use all the available data that you have today, let's say inflation is low today, but some development suggests that in the next 12 to 18 months, inflation is going to be high. Then, of course, you take a policy action of tightening. Now, like I've read in my statement, we are saying that as a result of the previous actions that Bank of Uganda took, particularly in terms of tightening the monetary policy stance, and also on account of the weakening of inflation at the global level, and most importantly, the stability in the exchange rate, we think that inflation is going to be below the 5% target in 24-25, compared to what we had projected earlier on. Our projection earlier on had an expected exchange rate that is much higher than we have right now, which was driving inflation to levels that were much higher. So given the fact that exchange rate to date has exhibited appreciation pressures compared to what we had earlier on, our inflation projections going forward are now much lower than we had earlier on. So it is based on that we are now reducing the CBR. So, like we mentioned in the statement, the projection has been revised slightly downwards relative to what we had forecasted in June 2024. And I didn't mention that this is largely as a result of a lesser depreciated shilling exchange rate. But having said that, we expect inflation to continue rising moderately for the next 4 months or so due to seasonal factors, but it will stabilize around the target of 5% in the first quarter of 2025. So that should address the question you raised about inflation, why we are lowering the CBR when inflation is ticking up. But also remember that the inflation that we are seeing tick up is really driven by the services inflation, which increased to 6.5% in July 2024, up from 6.1% in June 2024. And again, this is driven by some of the subsectors that are still recovering. For example, the entertainment industry. The entertainment industry is really the one driving the bulk of the increase in the services. All these guys, we were coming from COVID-19, so the activities in the entertainment industry were not as strong. These days, you move around Kampala on a Friday, Saturday, even weekdays. You look at all these roads, they are filled up by guys who are night clubbing, and that's an example of a growing entertainment industry. Okay, so that's what driving inflation. And then the other one was about gold. Yes, we don't work in isolation. We work with the Ministry of Energy and Mineral Development. We use the statistics that they have provided us regarding the gold reserves in Uganda, and what we have right now suggests that we have sufficient gold reserves in the country. And in as far as the domestic gold purchase program is concerned, we are finalizing arrangements with the local gold miners. These are the local artisans and also small, medium scale gold miners to put in a framework as to how we are going to be purchasing this gold. But most importantly, we are putting in what they call the chain of custody. That's the traceability of the gold. That's what we are working on. We want to make sure that the gold that we are buying is domestically produced. So the traceability is going to be a very important aspect of our gold purchase. We want to try to the extent possible to make sure that all the gold that we purchase is mined locally. Because the bit about that is we will be supporting what we call value addition. To date was like in the financial year that is ending, we imported about $2.1 billion of raw gold, and we exported about $2.3 billion. It means that we only added value of about $200 million, and that is very small. But let's assume we bought this gold domestically. Even $600 million of raw gold, you buy it from here domestically. What does that mean? It means that you are reducing on your imported gold, imported raw gold, thereby saving $600 million. That $600 million is going to remain in the economy, right? And not only are you doing that, you're also going to refine that gold domestically to to what they call monetary gold, with a gold period of about 99 point something %. So not only are you conserving the foreign currency going for raw gold imports, you are also giving money to the local artisans and adding value to that gold. So that is one way to contribute to socio-economic transformation while also increasing value addition in the economy, consistent with the government objective of socio-economic transformation. So that's all I can say about gold. But in case I've missed any question, I will ask Adam. The rest I will defer to our Supervision Directorate.
Robert,
Robert,
would you like to take that?
Thank you, Governor. I think there were two related questions. The first one was on the smaller banks and their use of the standing lending facility. The standing lending facility is a facility here at the central bank where commercial banks may access liquidity on a day-to-day basis depending on their liquidity requirements. The first thing to note here is that there is nothing wrong with small banks. In fact, the whole banking sector remains sound and resilient. And the use of the standing lending facility evolves from week to week. This week it could be the smaller banks, the next week it could be the bigger banks. It depends on the liquidity conditions in the market. So in summary, banks' access to the standing lending facility is normal. It is part of their liquidity management as they respond to Bank of Uganda monetary policy actions. And so the fact that they are accessing this facility is actually normal and there is nothing wrong with it. It also shows that they have adequate collateral to access it, which is a good thing. So we need to dispel this notion that because smaller banks have accessed the standing lending facility more recently, that maybe there is something wrong with them. There is nothing wrong with them. This is normal. There was also a question about the extent to which banks have complied with the deadline of June 30th, 2024 to meet the revised minimum paid-up capital requirements. As you may recall, as a have met the it is prudent there will.
So we'll, yes, please, Ali, you can come through.
Just a quick follow-up. I wanted
CBR, it feeds through to the way banks deal with one another, but also they fed into the lending, which, as you rightly put, is partly a reflection of the cost of doing business. So therefore, we believe that this is a reverse. Now it is the reverse order. Once you start easing, the easing will start feeding through. For example, if the interbank was at 12, probably going forward, interest rate or time deposit rates later as the transmission feeds through the entire chain. Basically, yeah, that's what we expect. Thank you.
Interbank rates threaten to go above and all right, then maybe they will just opt to take the facilities for deposit with the central bank.
Okay, I don't see any question coming from the room. Neither do I see any question. This press conference is now closed. For viewers who are still tuned in, we are going to switch to Luganda.
Myuka wa gavana wa banka enkulu ya Uganda gyafulumiza olwaleero olunaku olw'omusanvu mu Agusto 2024. Omumyuka wa gavana atangazizza nti akakiiko kakwata ku byensimbi kasazeewo okukakkanya akabonero ke twakazaako Central Bank Rate ne kakakakkanya ku bitundu 10 buli 100 okuva ku bitundu 10 n'obutundutundu 25 buli 100 gye kabadde. Omumyuka gavana atangazizza nti okutwalira awamu myezi 12 egiyise tulabye nti enkyukakyuka y'omuwendo gy'ebintu ezze ng'ekkakkana era omwezi ogw'omusanvu gugenda okutuuka ng'enkyukakyuka y'omuwendo gy'ebintu yali ku bitundu 3 mu mwezi ogw'omusanvu bw'ogeraageranya n'omwezi ogw'omukaaga tulaba nti enkyukakyuka y'omuwendo gy'ebintu yali yeeyongeddeko katono ng'eri ku bitundutundu 4 buli 100 okuva ku bitundu 3 n'obutundutundu 9 buli 100. N'alambika nti ekyo kivudde ku kuba nti okutwaliza wamu enkyukakyuka y'emiwendo gy'ebintu yeeyongeramu nga yeesigamye ku ntambuza y'abantu kujja n'atangaza nti balabye nti okutwaliza wamu tulabye nti enkyukakyuka y'emiwendo gy'ebintu eno eyambiddwako nnyo okuba nti obumulumulu bwe twali tulabye nga olutalo olwali mu Ukraine yamu ne COVID-19 akatale kagenda kabimanyiira n'olw'ensonga okumyumyulamu mu kye twakazaako monetary policy nakyo kiyambyeko ddala ate ne siringi ya Uganda bw'ogigamu balaga nti omwaka gw'ebyensimbi 2024-2025 enkyukakyuka ku kuba nti okutwalizamu obwetaavu bw'ebintu bugenda bulongooka. Tukendezezza ku nkyuka y'emiwendo gy'ebintu etujja ebweru w'amawanga awamu ne siringi ya Uganda okuba nti yeenywezezza. Wadde ng'ogwo guli gutyo bakubyemu ttooki mu maaso ne balaga nti myezi ena egijja mu maaso olw'okuba nti embeera y'obudde bwetyo bwetera okubeera tulaze nti mujja kubeeramu ennyambukamukko mu nkyukakyuka y'emiwendo 10 ne bawa ensonga oba obukongo buyinza okubeerako waggulu singa embeera y'obudde ekosa obungi bw'emmere ekkatale ekyo nakyo kiyinza okwongera kuba nga enkyukakyuka y'emiwendo gy'ebintu eringa ku bitundu 5 buli 100. Ne bakubako ttooki mu byenfuna binaatambula bitya ne balaga nti ebyenfuna by'eggwanga mu mwaka 2024-2025 bijja kukula wakati w'ebitundu 6 n'obutundutundu 5 buli 100 ng'ekyo kyesigamye ku kusiga ensimbi mu byenfuna okuva mu bantu ssekinnoomu gavumenti okwongeramu amaanyi mu nkoli gy'ekolamu emirimu gyayo. Ekyo kijja kuyambirako ddala era ne bakuba n'ettooki mu maaso nti okutwaliza wamu ebyobulimi n'ebintu mu nsi yonna kubeeramu obuzibuzibu singa tulaba nti emiwendo gy'ebintu ku katale k'ensi yonna keeyongera okuba nga tebivuddeemu ssente bulungi ne tulaba nti n'okutwaliza awamu asinga tutwala ebintu by'ebweru w'amawanga bitono kwerageranya ku ebyo oba ne siringi ya Uganda neeyongera okunaabuuka. Okusinziira ku ezo ensonga akakiiko ne katangaaza nti okutwaliza awamu basazeewo bakkakkanye akabonero kano ke twakazaako Central Bank Rate kadde ku bitundu 10 buli 100 kuva ku bitundu 10.25 buli 10 obutundu 10.25 buli 100 wekaali mu lukiiko olwaggwa. So byebyo omumyuka wa governor byatangazizza mu alipoota y'omwezi guno.
Wabeera walina ebibuuzo akozesa akakisa kano okubuuza omwami Sonko George William.
Eyanziza nnyo manya n'eddoboozi nze Samuel Kerimunda Smart 24 TV. Badde njagadde otangaazeemuko wano ku cost of doing business bwezigenda okubeera oluvannyuma lw'okussa ku CBR rate.
Smart TV. Smart TV Samuel.
Okay. Simon webale nnyo. Era ng'omumyuka gavana bw'atangaazizza alaze nti okutwaliza awamu enkyukakyuka ya ssente kyetulowooza nti kijja kweyongera okudda mu ngeri gye mukolamu bizinesi n'okukkakkanya emiwendo, naye kitwala obudde oba mu luzungu kye twakazaako pass through okusobola okutuuka ku nammwe ne mukendeeza ku ngeri gye muddukanyamu bizinesi zammwe ne ssente ze muteekamu ze mukyaginga abo abagula ebyammwe.
Waliwo ebibuuzo ebirala? Kale sirabayo alina ekibuuzo. Mwebale nnyo ajja kubeera naffe press conference yaffe ekomyawo.